zero-day options have really, to a degree, had an impact on this market, and some believe not necessarily in a good way. In fact, my panel coming up right now, they've got strong feelings about the Wall Street gimmicks in certain products. So I'm going to bring in Rob Luna. He's the head of Rob Luna Wealth Academy, founder and president. You know, Rob, I was here for the flash crash, and I'm still not sure what caused that. So, I mean, but it's unnerving, right? You can't be up, like almost a percentage point, then go down 1 percentage point in the blink of an eye.
Yeah, I mean, what it does, Charles, most importantly, as Kenny knows, it rattles confidence of the average investor. And that's the thing that worries me most. And the market has changed so much over the last 5-10 years with these algorithms, with these zero-day options, and that's more and more to come. But I think the most important thing as a long-term investor is you need to close your eyes, your ears to those days. You were talking to someone earlier, the stock market goes up over the long term. I would say use days like yesterday to be opportunistic. Unless you've got a 24-hour trading window, those are opportunities to buy when everybody's panicking. In the short run, you shouldn't be making long-term decisions.
All right, so Rob, let me stick with you on that, though. Today's bounce back, though, it's a pretty strong bounce back, and it feels good in some ways, but in other ways, it does heighten concerns over volatility. I know, listen, buy the dips, use these to your advantage, but when the market starts to get this extreme volatility, and we've been pretty comfortable with the VIX at 12, 13, even 11 handle, doesn't that change things for next year?
I mean, look, volatility, look, VIX at 12, Jim Urio was talking about if you're someone who's so inclined to hedge your portfolio with the options, you could do that. But again, I go back to the idea, Charles, look, there's going to be volatility. If you're going to invest in the stock market, be prepared at any time. The market could go down 10 to 15%. Don't put in money that you need to pay next month's rent with. Put in money that you're saving for 2 or 3 years. Volatility is actually your friend. Buy low, sell high is what we're all trying to do. So you actually need that volatility, Charles.
Speaking of AI, I know, Rob, you're saying that people who missed Amazon, Apple, and Google in 1998, they have a chance to sort of reap similar benefits with Web 3.0. We've only got a minute to go, but you say on the business side you like, and you've mentioned these names on the show before, CrowdStrike, Path, Shopify, Zoom, which is kind of intriguing, Coin, Roblox, and DraftKings. These have been extraordinarily volatile stocks. Explain, I mean, you're going to write, these are going to be some high beta, big ups and downs between now and 5 years.
Yeah, I'm going to take the other side. Like, Kenny's talking about value as Cisco, and I completely agree there. And there can be some 20, 30% upside in a name like that. But what I'm trying to talk about, Charles, is the big systemic plays of what you're going to do. I bought my best trade I've ever made was buying Amazon in 2000. I've sold very little since then. But, Charles, I've been down 90%, 50%. But it's not going to be Amazon, Google, Meta that's going to be leading the next 10 years. It's these types of names. There's going to be some volatility, so buckle up. But if you're looking for those 10 baggers, 20 baggers like we're all doing to pair with your S&P fund, these are the names that you have to go into. And I promise you, if you buy a basket of these names and you close your eyes, when you wake up in 5 years, you're going to see some really good returns.
All right, well, full disclosure, either I have them or my subscribers have 4 of these names, so I hope you're right.